Hey everybody, welcome to the podcast. This podcast was brought to you by Avatar 2.0. Avatar, the ultimate dress-up app. For guys and girls, you can try on dozens of outfits without ever having to step foot in a dressing room. Okay, today I want to talk to you a little bit about Amazon and Tesla. Both of these stocks hit all-time highs last week as the market rallied, especially in the tech sector. Tesla's expectations were beat, and the stock was trading at over $1,200 a share. Some analysts have come out and said that it's going to be $2,000 a share. I'm looking at the futures right now. It looks like we're up about 1%, a little over 1%, 350 points on the Dow. So let's get into the technicals. Typically between Tesla and Amazon, we trade the Amazon calls or puts because the implied volatility is much higher on Tesla, meaning those options are more expensive. So if you're on the sell side, if you have a huge amount of money and you can just, afford to put up that money essentially as collateral for selling your options, you can make a killing because people know most options decay and 90% of options turn out valueless at expiration. So basically, we look at the implied volatility. The implied volatility, as you can see here, between Tesla is very high, almost as high as 75% during earnings weeks versus Amazon, which is anywhere between 25 and 50% at earnings time per option. So we can go into that at a different time looking up the definition of implied volatility, but essentially the higher the implied volatility, the more expensive the option. So this is all about value hunting. You want to get a low priced option and look for a gap close or some kind of technical event that is going to make the intrinsic value of that option much higher by expiration. Here we are on TradeStation, and we're looking at the S&P on a daily chart. Let's take a look at the technicals on Amazon. This is a daily chart, and as you can see, Amazon has hit an all-time high on Friday of approximately $29.55 and change. Almost $3,000 a share, and look, it closed right here on support resistance 1. It literally closed on monthly resistance, which is $28.90 and 84 cents. So if we look at this, how high could it go? I mean, this could easily come back down. The great thing about trading Amazon is that there is some liquidity in the options market. And when this thing goes, like 100 points in a day, which is basically 3% of the stock, if the stock's trading at 3,000, 1% is $30, 3% is $90. So if you're just over 3%, you basically have a 100-point move or a 10,000-point move in the options, the underlying intrinsic value of any call option, for example, on this particular day. Amazon is sitting on monthly resistance. Let's take a look at Tesla. Nice job, Amazon. And nice job, Tesla, too. I mean, Peter Thiel once said, never bet against Elon Musk. So here we go. Tesla is actually sitting on a gap. It's right on top of a gap. I'm going to actually go over and pull this up to, let's see, Amazon. Let's take a look at Tesla. I think it had it up. There we go. Tesla. Let's move out to, okay, it is. Look, there is a gap. Yep, this is, so now we're looking at the AI trader or AI deep trader, as I call it. This is
basically a lot of algorithms. For example, gaps. It's detecting all the gaps open and when they're closed. This gap is open still. If you notice, like this little gap, it actually has a close mark on it. This one is closed and no longer draws those lines. Pink is for down, green is for up. So that matches the stuff on TradeStation here. Let's take a look at Amazon on AI Trader. There's a lot more information that it gives you, and I'm able to, program that up with the team so that we can basically have, a real nice, smooth, canvas HTML5, CSS based, scalable design. So this is Tesla. Okay, let's take a look at Amazon. Here we go, Amazon. It currently closed at 28.90 and change on 7/2 right there. Amazon catalog and mail order. Who would have known mail order produced the richest man in the world, or one of the. And look at this breakout. This gap was created and then closed. Amazon has just been on a tear. Look at that. Damn. So this is Amazon. You can ignore this stuff on the left, but basically what it is all the different buy sell signals, whether it's on support or resistance, or if it's above a gap or below a gap. All those different indicators are actually produced into essentially a 0 to 100% bar graph or meter. And those different meters for, let's say, red or green will feed into the AI system. So that's post first release, but we want to get people up and running with, basically this is all stuff that I learned. It's not, I didn't make it up. I just embellished it so I can say, okay, there's a buy or sell signal. It's also calling low close dojis. It can call, Chinese chopsticks or shooting stars or inverted hammers. These are all things for future development, but the main thing, like gaps, when a stock like Amazon gaps up or down 100 points, again, that's $10,000 in a options contract, one options contract. If you have 10 contracts, let's say you paid $7,000 a piece for them, a $70,000 position turns into a $170,000 position in a few days. Those are the technicals right now on Amazon and Tesla. Again, we trade the Amazon options because they're cheaper in terms of the implied volatility. And that's about it. We'll see where this goes today. This is what we're looking at right now. The 2880 calls. They were closed at, that's between $68 and $75 a contract. This one has approximately 2 weeks expiration. So 7/10 is this Friday, 7/17 is the next Friday.
Hey, everybody. Thanks for listening. If you like this podcast, like and subscribe, and we'll have a lot more in the future, usually at the beginning of the week, like a Sunday night or on the weekend, so that you can actually take advantage of these technical algorithms we've developed for your trading patterns in the following week.